Greetings, Jedi traders. David here of TradingFibs.com to bring you the daily trend for end of the week, number 18 of 2016, May 6th. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only to support your knowledge of the market. See what's going through my head on any given day. Always make sure you have a solid trading plan and always manage your stop when placing a trade. All right, there it is. Weekly results for trading session focus week 18. Jumping in right to Friday here. Could have been a lot better session, but managed to squeak out some solid ticks. Again, not on all the indices at once. 3 markets, 6 setups, and 92 ticks for the session. Trending. What were those trends of the day? That's right, looking for the best of the best setups. There it is. 4 charts in the green. Can't complain on those. 1, 2, 3, 4, all across the board on all 4 indices. What keeps you in the trade? Solid hike in Ashi bars, tails up, multiple trend studies, whatever it is. Your focus keeps you in the trade, and that was one of our better setups of the day. Here was the crude to the upside as well. What a nice trending day. Again, gold standard setup right across the board. Buy signal right to the upside. 1, 2, 3, and 4 all the way up. And there was one of our other better trades in the afternoon. We could see here on the ES to the upside. Solid body tails up in there to the upside and exit. That was actually one of our morning trades there on the YM. Make sure you check out TradingFibs.com every day. You can see some of these trend setups, including, let me scroll down here as we'll soon get to the charts here, but here we see the multiple trend studies. It sometimes keeps you in the trades. 50 above 144, whether you're following the multiple moving averages, following the Kiwi trailing stop, or Kiwi super trend, anything to keep you upside. All right, let's jump right into the big picture for the day here on the daily trend. Before we do that, let's get back to the econ data here. What was so important today that we had 2 days of chop with a whole host of economic data that didn't seem to manage to move the market except for small pockets of trend. Great first 2 days of the week. Second, Wednesday, Thursday didn't look so hot, but it was today, Friday, with, that's right, employment situation, non-farm payrolls, number was in the bottom, not as expected. Rig count, consumer credits, well, that didn't seem to think or move the market down. It actually lifted it up. Don't listen to what anybody else is saying out there. Just simply trade the charts in front of you. Turn the TV off, put the newspapers away, and here we go. Taking a look at the crude, best setup there of the day, trending wise, until the indices finally came into play. I'm serious, Jedi traders. You guys, non-farm payrolls came out this morning. You guys are thinking the market's headed down, and what does it do? A little chop in the morning session, and eventually makes its way back to the upside and rallies quite strong. Let's take a look at actually the AD line before we get into the indices here. Taking a look at the chop. We had a lot of chop there in the first part of the session. Again, market was trying to get above that pivot with one small move to the downside. Get back up to that pivot, chop along, and there it was, a PM session rise as market action was able to find its footing and break to the upside. All right, let's take a look at each individual market. As the crude we talked about pretty much afternoon session, chopped it out. But that's what you're looking for, guys. It wasn't the market open on the crude. It was the second entry here. Buy signal to the upside. 4 charts in the green, 50 above 144. And re-entry up here. Small pocket took you out, but maybe you got back in or at least held on for some more ticks. So nice move on the crude. Always looking for 4 charts in sync. There's the YM again. We just saw on the AD line, market action came down. That's right, came down as we got close to the European close. Market action started to lift here for the majority of the rest of the session. Yep, there it is. There's the telltale. You don't have to look at the candles. You can just see the 50 above the 144. How many entries here? Well, you got 2 charts in the green here. Not the best of setups, but there it was. Buy signal. All 4 charts in the green. Re-entry right here. second one, and then finishing up at the highs. Very nice move on the YM. Let's take a look at the NQ. As price action very similar. Again, some small setups in the AM session. As price action, we know that non-farm payrolls pretty much chopped it up prior, but once we got into the regular trading hours, we had a move to the upside on 3 charts in the green. The only problem here, guys, is tick count and AD line weren't exactly supporting that move. Maybe you sat out of that, or maybe you just took the entry on the 3 charts and got some ticks. Well, this trader here managed to get in on the YM. It wasn't the NQ. Again, sometimes fat fingers can't get on all those buy orders. Anyway, so what do we got? We got morning session with a little bit of pop. Price action coming down as the AD line was coming down. 3 charts in the red, 3 charts in the red. And then all of a sudden what happens? Price action lifts in the afternoon session. That's what you're looking for. First of all, first initial entry, 2 charts in the green, held off from that. It was the re-entry that had the better setup with 4 charts in the green. Remember, anytime markets have less than all charts in sync, the risk is on. But hey, 50 was eventually above the 44, supporting the move to the upside. Hey, let's wrap it up with the ES here. Price action again, same picture. Again, downside movement after that upside on 3 charts in the green. If you got that and you're able to hit that with all 3 buy signals to the upside, kudos to those traders. But other than that, it was the sell signal on the mid AM session as price action came down 2 charts, 3 charts here in the red. Not a bad move. And then back to the upside, trying to regain its footing, and then right to the upside buy signal on, that's right, there it is, 4 charts in the green. That's what you're looking for. That's what we saw on the crude today. So, daily pick. Let's take a look at the crude. What was the reason for any of this lift? Well, price action been chopping around here at that 50 EMA, support here at the 23% Fibonacci level. Never really coming close to that 200 period moving average yet, so yet crude still seems to maintain its footing here at the 44 line. All right, let's take a look at the other 3 indices. As price action on the NQ coming down here, volume looking great across the board. Price action here getting a lift again. What gave it that lift? Well, for whatever reason, we got a lift. We got more buyers in the market. T3 moving averages giving us a Heikin-Ashi lift. Again, big picture for the 4-hour chart, guys. We've been in pretty much a downtrend for the last couple weeks, finally crossing over to the downside with the other 2 indices here, the YM and the ES. But please note here that both the well, let's just look at the ES here now. Price action on the ES finding its footing here at the 50 period moving average today and coming back upside, where the YM actually not being able to tap that 50 MA, but what we did see is that price action managed to break back upside and find its resistance at the 50 EMA. So looking ahead to next week, look for price action to either resist at these key lines or to break on through to the other side, as the Doors say. Excuse me. But it will be the intraday picture to see if the trend follows through. So keep that watch there. We both have those key moving averages downside as well as the 144.50 EMA upside. Let's take a look at the daily gaps. Daily gaps, again, we have not much here on the YM besides the downside. So if we find the resistance here and our solid Heikin-Ashi bars turn back downside, then we might be in for some little trouble. But we'll watch that 50 MA and 200 MA. But as far as daily gaps concerned, we're okay on the YM till we get down to 15,924. The ES finding its support here at the 23% fib retracement. Yes, we have Fibonacci levels downside as well as, that's right, daily gap down there at 1860.75. NQ with some open gaps upside, hanging out here at the 38% retracement and 40.17 with our downside open gap. There is the crude again, major open gaps downside, still finding its footing here at 44.13, the 23% fib retracement. And taking a look at our volume profile, we have an adjustment, new number on the NQ, finding 42.81 to be its happy number here. So price action holding on to that 600-day volume profile. Here we have on the YM 17,546, 3 days straight, hanging on to those levels. ES up here at 2060.50, as we've been talking about all week. The crude If we manage to get upside, we got both open gaps as well as a major VPOC as well. Any numbers hit on the daily Fibonacci target levels? Oh yes, take a look at this on the NQ. Price action really ran it up today, never coming down. The target low is actually right there in the first 60-minute bar there, first hour, managing to hit that target high. What a nice run that was. Taking a look at the YM, price action as we got our lift today, hitting also that Fibonacci target high right in that first hour. And let's make it a trifecta. There she goes. First hour, ES right there, Fibonacci target high, never even coming close to those target lows. All right, looking ahead to next week there. Let's change that calendar to next week as we roll through the month of May. Taking a look at some multiple Fed speakers throughout the week. Always paying attention to the EIA. Don't forget the global news balances in. Consumer sentiment there on Friday. Anything else that might pop up for the week. But as we roll in, let's look ahead as to May 16th. Watch for those FOMC minutes to play a role there. All right, guys, that concludes today's daily trend. Feel free to stop by Trading Fibs or any of my social media outlets to obtain more information. Make sure you check out my weekend post, the Futures, ETFs, and Market Cap Leaders, where I go into a variety of different markets and indices here covered from the ETFs to the industrials, FX pairs, and total stock market index. Make sure you check out the weekly supplemental technical momentum outlook. Click there and you got 98 pages of fun. That's right, 98 pages of charts with a detailed setup of where we are currently in the trend. Again, not really a crystal ball of where we're headed next week, just to kind of tell you where the support is. And based on the strategy, you don't need anybody out there to tell you what to do. You can just simply take that stock, take that index, ETF, or FX pair, put it in a chart, use the template, and you guys have a additional tool in your bag to either keep you in the trade or put you out of the trade. All right, my trading mantra: one simple strategy, eh? Any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter and at Trading Fibs. And as always, I really do leave the crystal ball to the experts. I only trade what's in front of me and on my charts. And as always, leave your bias at the door when trading. Have yourselves a Blue Zone weekend. Good day, good night, and wherever you are, good trading.